So are you wondering, is the Fayetteville market finally slowing down? So the Fayetteville market here has been kind of a roller coaster with interest rates rising. The market kind of settled down a little bit, and then of course due to Fort Liberty, Fort Bragg, we had PCS this season. So it picked up a little bit over the summer, but now with school starting back up already, things have kind of settled down. And you probably got some conflicting information like, should you buy, should you sell, should you invest? Is it a good time? Should you hold on to your home because you're stuck in a low interest rate, which I don't blame you for, and it can seem overwhelming. So instead of getting caught up in the headlines, let's dive right into it and let me tell you what I think about the Fayetteville market. Hi, I'm James, your go-to real estate expert here in Fayetteville surrounding areas. Whether you're looking to buy, sell, or invest, I'm here to help you make that informed decision. We are a team of realtors, so give us a call, text, or email. We'd be happy to work with you.
Call us.
So when you reach out, we can just jump on a call or a Zoom call and see how we can help you with buying or selling your next home. Or you can just click this QR code up here in the corner. So first thing we talk about is going to be the current market overview. Is the market slowing down? Is it cooling off? Is it still hot? Did it reach its peak? So in my opinion, personally, at this time, the market has definitely slowed down a little bit. I wouldn't say it's cooled off just yet, but it has definitely slowed down. A lot to do with interest rates, I believe, and just the season time. We're about to get into the holiday season here, so things are slowing down. Kids are back in school, college, and people are kind of slowing down and happy to have the kids back up at school and be able to relax a little bit. So the latest trends and demands I've been seeing lately is we're getting a lot of new construction homes, and they're being built very, very quickly. Not saying it's a bad thing, but they're going up faster than I could imagine. So we're definitely still in a seller's market, but it's cooled off just a little bit. So with inventory levels, the question probably is going to be from you, is it rising? Is it falling? Is it stayed level? And I would say it's rising a little bit by little bit with inventory. I'm definitely seeing more days on market for some homes. Over the summer, we were looking at about 10 to 15 days on market, active market time for a home. And now we're seeing around 30 to 40 to 50 days on market, even 60 days on market. Not saying it's a long time either. That's actually pretty good. So you want a balance, as much as we can, a balanced market for buyers and sellers. And going right back to new construction, I'm seeing a lot of new construction homes going up, and some of these new construction homes are often very good incentives. I've seen some with $15,000 to $20,000 to $25,000 closing costs.
Tell me more.
So if you're looking at how a brand new construction that's around $300,000, typically your closing costs on average would be between $10,000 to $12,000, and they're giving you $25,000 possibly with these closing costs. That's definitely more money in your pocket. You're basically coming out of nothing out of pocket for a new construction home if you are able to find a deal like that, and they are going on. So what does this shift in inventory mean for buyers and sellers? For buyers, it's definitely a good thing because now you've got more inventory to look at. You got more time to make a decision. Is this the right house for you? Because our median price range here is about between $250,000 to $270,000, and before you make a hard decision, this is the biggest investment of your life, and you're spending possibly, depending on you and your budget, up to $250,000 on this new brand new home. So you definitely want to have time to be able to think about it, make sure it's the right decision for you, your family, whatever the case may be.
I agree. I agree with you.
So with this inventory slowly rising, that is definitely a good thing for buyers. For sellers, yes, I know you probably were hoping for that multiple offer situation, and you're able to pick and choose which may be best offer for you and get the most money out of your house. The most you can get, definitely understand that too, but it's definitely not like that anymore. I still are seeing some bidding wars. Actually, just to give you a little story, I listed a house for $208 just over the weekend at the time of this video, and we priced it right, correctly, and we were under contract within 2 days with 4 offers on this house. So with a house priced correctly, you definitely will have more offers. And as for a seller, you definitely have you've got some choices here. You've got 4 offers or how many offers you may get on this house, and that's definitely going to help you make a better decision instead of having to just jump into the first offer you see, maybe because you think nobody else may be offering anything, or if you price your house too high. You definitely don't want to do that, because more time on the market that your house sits on the market, more people start wondering what is wrong with your house. It's kind of like the dating app. I use this example a lot just to be funny. The longer they see you on the market, they'll then start wondering what is wrong with you.
I don't know what's wrong with me.
That's what I mean by the dating app. So definitely, we don't want your house to sit on market for a very long a time, and you have to drop the price and drop the price and drop the price. If you have a mortgage on your house, and just say your mortgage is $2,000, and it sits on the market for about 90 days, that's $6,000 you spent on a mortgage. And in our area, a lot of our homes could be vacant because soldiers are PCS are moving to their next duty station. So now they spent $6,000 on this empty home, and they got to make a decision. Either going to keep lower the price to make up for this difference, or rent it out. And most people don't want to rent it out typically. So with that example, you've now lost $6,000. Now you've dropped the price, we'll say $5,000 or $6,000. If you'd have done that to begin with, maybe come in at a good, decent, fair price, you never would have lost $6,000 to begin with. Just an example. Not saying that's always the case. Each house, each situation can be different. And I've definitely seen an increase on days on market here in our local area. And with that, you're probably asking, why are we seeing more days on market? And it has to do with a lot of things. I think one of them definitely is going to be sellers are pricing their house as high as they can get it. Not all sellers, but they're pricing it very high. And again, like I said earlier, longer days on market, the longer people wonder what's wrong with your house, and then they have to drop the price, and they're mad at their realtor, wondering why it isn't sold yet. If your realtor spoke to you and you didn't listen to them, or if of their advice, which you don't have to, of course, you can do what you want to do. It is your house, but we're professionals at this, so listen to your realtor. If they think a certain price, definitely listen, hear them out, or at least. What I like to do is if some sellers are like, hey, I want to price at this price, there may be a price I not recommend. If it's nothing drastic, I would say, okay, let's list it at this price. And after a couple weeks, if we get some showings, we get some feedback, and they're saying it's priced too high, or we get no offers, we need to come back and talk and discuss your price and then drop it. I wouldn't wait too long. I think a couple weeks after some feedback, you definitely would be able to determine, what's wrong with the property. Some things you just can't fix. Obviously, if somebody wanting a certain square footage or something like that, it's not in the cards, but it's something you need to talk to your realtor about. So next thing we talk about is going to be some key trends that happen in 2024. So one of them is, why do we have low inventory? And that is, of course, due to COVID back in the day, 4 years ago. We're still recovering from that. I think most cities are, with just low inventory across the board, but it is getting better. I checked the market today, and at the time of this video, we have 2,027 active homes on the market in the Fayetteville surrounding areas. Now, a balanced market typically would have 4,000 to 5,000 homes. So we have half of that, or just a little bit more than half of that. So it's not quite there yet, but we are definitely getting there. I would say hopefully in the next year or so, we will be at a balanced market. So what does that all mean? We're still a seller's market, which means we have more buyers than we have sellers.
Unless we restore balance.
Inventory is only increasing, it's not decreasing. And interest rates are floating around 6 to 6.5% right now, I believe. Still high. And a lot of people are not wanting to sell their home because they're happy and comfortable with that 3, 4, 5% interest rate they're paying right now. And they may have a lot of equity in their home, but they don't want to go to 6.5%. So here's a quick little article that I found in the Fayetteville Observer, and I'll read it out to you real quick. So homes in Clinton County sold for lower prices recently. See how much here. So this is from USA Today Network from Realtor.com for June numbers. Show that potential buyers and sellers in Clinton County saw houses sell for slightly lower than previous months. Medium sales prices saying it's around $237,000. Medium home sold prices around $235,000. So we're talking a couple thousand off there. June, the most recent month where figures are available, was down 0.6% from May. So from May to June, we saw a decrease of homes being sold by 0.6%. And if we go back a whole year, you'll see the article says compared to June of 2023, the median home price sold was up by 12.1%. So this goes right back to what I was saying earlier. Definitely we are slowing down a little bit, and we're getting more inventory, which is great for if you're looking to buy, if you're looking to sell. Again, price your house correctly. So next thing I talk about is going to be mortgage rates. So right now they're floating around at 6.20 at the time of this video. They actually just lowered about 2 or 3 weeks ago. We may see another one depending on, with the election and things like that going on. We say maybe see it go lower after the election, before the election. It's hard to say, of course. But I'm going to pull up a mortgage calculator and show you on my screen how much a house may cost at $250,000. All right, so we're in it inside a mortgage calculator, and just to show you, let's say, like I said earlier, medium price homes between $250 to $270. We'll start off with $250. We'll do 3% down, $7,500, 30-year mortgage, and I think the rates are currently at 6.20. Time of this video, we'll do 28315 because it doesn't really matter. Property taxes we'll put at 150. These are just numbers I'm making up. That could fluctuate, of course, depending on where your house is that you want to buy. So 150. For homeowners insurance, this is all a month. So this is what they call your PITI, principal, interest, property taxes, and homeowners insurance. So at a house of $250,000, if you put 7% down, or 3% down, 30-year mortgage, you're looking at a house payment of $1,785, compared to, let's say, interest rates went down to 5%, $1,602. So you're looking at almost saving $200 a month. When the rates drop down to 5%, if they do drop down to 5%, I know everybody's hoping for 3%. I think those days are gone for right now. Definitely, unless we have another pandemic, I just don't see it going down to 2 to 3% anytime soon. Of course, I can't predict the future. I don't have a crystal ball, so that may or may not happen. And I said 3% down, and you may not be able to put 3% down. So let's say you put 0 down. Say you went VA loan, you put 0 down. So 0% down, we'll go back to 6%, 6.20% interest. You're looking at a house payment of $1,831 without any money down at 6.2% interest. That's if you're using a VA loan, USDA mortgage loan, something like that. I did 3% just because that's conventional. If you do FHA, 3.5% down, it's $87,000. I'm sorry, not $87,000, $8,750. You're looking at a payment of $1,778. So definitely an interest rate drop to 5% from that. You're looking at saving roughly, almost $200 a month. So definitely, I would say if you get a house payment at 6.2, or something like that, and once the rates do drop, I would recommend it to you to definitely refinance. Be aware these numbers. I'll put 150 just to make it even, for easy math. Could be lower, they could be higher depending on where your house is that you're going to buy. If you're going to buy a house in the middle of the city of Fayetteville, you're looking at paying county and city taxes. If you buy something in Raeford or Hope County, it's going to be definitely a lot lower. Hope Mills, Stedman, Eastover, Harnett County area. So keep that in mind, that this is not set in stone. At least it gives you an idea of what your mortgage payments would be every month. I think that's basically what everyone's looking at. Typically when I talk to clients, they're always going, what's my mortgage payment? I always tell them to get with their lender, because I'm not a lender again, but anybody can pull this mortgage calculator app on an app, probably on the website, just like I did, and kind of punch the numbers yourself just to see what your mortgage payments may be. I know we talked a little bit about new construction, so I'm going to hit about it a little bit more. We're definitely seeing an influx of new construction homes being built in the Fayetteville surrounding areas. Currently, we have 860 brand new construction homes active on the market for sale right now. I can't pull numbers up from last year, not sure. I don't see any stats for that, but definitely I will say this, just driving around Fayetteville, lived there for over 35 years, retired police officer, so I did a lot of driving around the city. That is an influx of brand new homes that are being built here in Hope County, Harnett County, and Cumberland County. And a lot of these brand new homes, they're definitely giving a lot of incentives. So as a buyer, if you were not aware, a new law came out August 17th, where now it's always been this way, just to kind of not confuse you. Sellers typically in the past, before August 17th, would offer to pay the buyer's commission. So if they sold a house, let's say it's 6%, the sale price of the home, typically the listing agent would take that 3% and split it with the buyer agent evenly 3%, 3%. And it's always been that way, kind of an unwritten rule. But the seller of the home did not have to do that. They could said, look, I'm only going to pay you, the listing agent. So now on paper, basically, where if a buyer agent wants commission from a home, they're going to have to ask the seller for it. If the seller doesn't want to provide it, then the buyer, they have to get it from the buyer. And that's going to be a house by house basis. For the most part, we've been effective with this rule for just over a month now, time of this video. And I have seen nothing change to where sellers are still offering buyer commission. Of course, that could be that, I'm not going to always encounter that to where they may not want to offer it, but just be aware if they don't offer it, you as a buyer, your buyer's agent to pay it. Let's say the seller offered only 1%. They may come to you to pay the difference. And that's something you guys have to work out, and they should let you know of all that. So whatever realtor you choose, whether it be me, somebody on our team, or somebody outside of, that's something you guys have to work out yourselves. But I say all that just because new construction homes, these builders are offering, for the most part I've seen, are upfront saying they're going to offer to pay the buyer commission, and they are offering closing costs. I've seen closing costs up to $20,000 to $25,000. I've seen it where they're offering agent bonuses of $2,000, $3,000, $4,000, $5,000. As you can see by these flyers here in front of you, this is just recently where new construction home called Dream Finders Homes are offering a bonus to the agent who brings somebody, and they're offering $20,000, $25,000 for limited time. So definitely, time of this video, if something you may be interested in, reach out to me if you're looking at some new construction homes. Dream Finders Homes have new construction kind of all over the city. So if you got a certain area you're looking at, they may be building in an area that you like. Right now, I'm helping a good friend of mine who's a police officer who's having his house built in Hope Mills. It'll be ready in March of 2025. They're using the home is Dream Finders Homes, and they got a lot of incentives to build their house. So they're happy to get a brand new home. You got to pick out what they wanted in the house within their budget and things like that. So definitely new construction is a great way to go. A lot of people are going towards it just because of all the incentives. Next thing to talk about is going to be market predictions and just my analysis of what I think is going to happen. So what I see happen in the next year is that we stay at the steady pace of where we get a little bit of inventory, a little more inventory to where we start getting back to a balanced market. Interest rates, it's just hard to say what's going to happen. They did predict that it was going to drop 6 times this year in 2024, and it only dropped, I think, twice. So we just don't know. Predictions are just that. They're predictions. Just knowing what's going on with the market. I think with the election going on, I see it dropping some more depending on who gets in office. But right now, I just don't, I can't give my advice on that. All I can tell you is that I think obviously we're gonna get to a balanced market. We're in a unique market here in the Fayetteville area just because we're close to Fort Liberty, Fort Bragg. So we have a lot of soldiers moving here, a lot of soldiers moving away once they get here. So our market's kind of it's an even flow. It does slow down, of course, just like any other market, but it's not like very drastic where it's up and down like a roller coaster too much. And even with high interest rates, like you see by the numbers I showed earlier, that we are still year after year, we're still increasing. We're not increasing, a little bit increasing with numbers. It's not like it's in the negatives, it's definitely in the positives. So even with high interest rates, people are still buying homes here. It hasn't slowed down so much to where it's in the negative or more balanced. So my prediction, if you are definitely buying a house, at the time of this video, you've got some wiggle room, a little bit, depending on your price, kind of house you want to get. I said the market, not the market, but the median price range, average price range between 250 to 270. If you're looking at anything around 200,000, typically it's going to be a smaller house, and anything starts looking below 200,000 sometimes is something that needs a lot of work. You're not going to find those kind of houses typically as much as we used to. I'd say a year ago, I helped a client buy a house for around $210, I believe it was. She found me on YouTube. She's an investor, and she bought a house here for around $200,000. She was so happy. Compared to the prices in California, I can only imagine. And it's definitely a great place if you're looking to invest, because we have soldiers moving here, Fort Liberty, Fort Bragg, where they don't want to buy a house and they want to live in a house, and they got a big family, and they get money from the military, BAH or BAQ, to live off base, and they get paid to live off base. So they're more than happy to do that and not have to buy a house, live here for a few years, go off to the next station. And again, like I said, I know I don't mean to beat a dead horse here, but as a seller, you've got to price your house right accordingly, or you're looking at a lot of days on market. You saw the numbers, not that they're horrible, but you're looking at 30 plus days on market, sometimes 30, 40, 50. I seen show a house last week to a couple. It was on the market for 180 days, and they dropped the price about 6 times. Finally went under contract, I saw, because my client actually was interested in it, but and they're moving here from Miami, so you've got to price your house right. Just because we give you market analysis, and everybody wants to go with the highest number, and I gotta understand why you want the most money you can get from your house. I totally understand that, but you could be hurting yourself in the long run sometimes if you price it too high. So as a buyer in this market, I would definitely say if you see a home you like and it's been on the market for at least a good month or so, you may have some negotiation room. They always have negotiation room, but definitely talk to your realtor and you have some room to negotiate. Maybe ask for closing costs, ask for a reduction in price, maybe both. Offer a lower due diligence money, lower earnest money, things like that. It's definitely going to be a house by house basis, but as a buyer, I think you've got that negotiation room to where you can do that. You can have time to think about buying this house.
Negotiating.
Sleep on it, and make your decision, or keep looking at homes. And if you're selling your home, definitely, if you can, make it look very presentable. And you're probably thinking that's a stupid thing to say, but you'll be surprised. Definitely, if you've got rotten wood around your house, a soffit, fascia board, if your house needs painting, if you can do it, I would definitely fix up your house. Definitely do some landscaping. Make your house look more beautiful on the outside. The old saying, first appearance is a big deal. And you definitely, with your house, people walk up to your house and they see that the gutter's hanging off and you've got rotten wood around the house. They're going to be asking themselves sometimes of like, wow, that's what I can see. And now, what can't I see that they have not fixed? And yes, they can get a home inspection, and I recommend a home inspection for a buyer, but who wants to spend $300-400 on a home inspection, find out there's so many problems with this house that they're not going to buy it. They're going to now back out. So now you wasted your time with going pending and losing time on market. So definitely my recommendation to you is definitely fix any repairs, anything that's wrong with the house, definitely fix up. Like I gave the example earlier where I had a couple who sold their house. We listed it for $208, and they took a week and they pressure washed the house. They cleaned the house up. They painted. They fixed their flooring. They have a pool. They cleaned it out. Not that it was totally dirty, but they had it presentable. And we got 4 offers on their home, and one of them was three of them was over asking price of $208. The house is pending right now, so I'm not going to tell you what the price of the house is that it did. Maybe later on after it sells, we'll give you that price. Definitely with them fixing their house up, definitely made a difference. Not saying it was horrible, but they understood the assignment. They knew what they needed to do to get their house sold quickly as they can and what people were looking for. So keep that in mind if you're selling your home. So if you're interested in a more personalized market analysis, definitely reach out to the team and I. We would love to help you. All my information is down in the description below and right here in the screen in front of you. Call me, text me, email me. You can also scan this QR code up here in the corner and schedule a time on the calendar. We can definitely set up a Google Meets or Zoom call with you. Thanks for watching this video, and definitely check out this next video that YouTube recommends to you, and I'll see you guys over there.